Title: The Cashback That Cost Me. Kofi loved systems. Not big, complicated ones, just small, smart moves that made his freelance life smoother. At 34, he'd spent the last 5 years building his digital marketing business from a co-working desk in Accra to a fully remote setup with clients across 3 continents. And one of his favorite systems? Cashback. Every flight, every design tool, every piece of ad spend, Kofi put it on a credit card that gave him something back. One card gave him 2% cashback on software subscriptions. Another offered rotating rewards for travel and digital ads. He didn't just spend, he optimized. When digital banks started offering referral bonuses, Kofi jumped in. He signed up for 3 fintech platforms in 1 year and referred his audience using affiliate links. Invite a friend, earn $150, the banner said. He invited 80. The money landed right in his account, sometimes as cash, sometimes as loadable credits. It felt like beating the system. One weekend, Kofi filmed a short video for his YouTube channel, How I Earned $500 in Cashback This Month with Zero Extra Work. He broke down his monthly expenses, the card types, the referral tactics. He even added a Google Sheet link to help others track their own reward points and bonuses. The video hit 0 views within a week. People loved it. He got messages like, "Bro, I didn't know airtime credit counted. Do you get taxed on all this?" He smiled when he read that one. "Taxed?" he replied in the comments. "Nah, it's just smart spending." And that's how he saw it. These weren't earnings, they were discounts. He wasn't getting paid, he was getting rewarded for being clever. Or so he thought. Tax season was around the corner, but Kofi wasn't worried. His invoices were in order. His expenses were well logged. His income was clear. He didn't know that the $150 per referral payments and digital wallet bonuses he'd been racking up could be treated as something entirely different. He didn't know yet that smart spending and smart reporting weren't always the same thing. Kofi didn't dread it. He had built his business on structure, monthly spreadsheets, labeled receipts, and cloud backups. He wasn't the kind of freelancer who scrambled at the last minute. This year, he had even hired a new accountant, Amma, who came highly recommended by another creator. They sat across from each other in a small office filled with sunlight and stacks of colorful folders. Kofi slid his flash drive across the table with a confident smile. Everything's in their income, invoices, expense categories, mileage, the whole lot. Amma nodded, plugged it in, and started reviewing. She scrolled silently for a few minutes. Then her brow furrowed. "What's this line?" she asked, pointing at a section titled Referral Bonuses. "Oh, that's from the fintech apps," Kofi replied. "I promote them on my socials. Each sign-up gives me 150 or sometimes 10 if it's a global platform." Amma scrolled further. "And here are cashback totals?" "Yeah," he said. "That's just my business card rewards. I get 2% back on all digital tools and ads. It's automatic." She clicked through one more spreadsheet, then looked up. "Kofi, not all of this is tax-free." He blinked. "What do you mean? Cashback is like a discount. And the referrals, he earned those. They're perks." Amma leaned back. "Cashback on purchases? That's usually fine. It's seen as a rebate. But when you earn a bonus or cash directly without buying anything, it's often treated as income." Kofi crossed his arms. "But I didn't charge anyone for it. The platforms give it freely." "Exactly," she said. "And in many countries, including ours, if you receive cash or credits that increase your income or reduce your costs directly, that can be reportable, especially if it's tied to business activity." She pulled up a breakdown. 700 in referral bonuses from app signups, 800 in cashback earned, part of which had been used to buy deductible business software. A 200 travel reward card spent on flight upgrades Kofi also wrote off. He frowned. "So you're saying I owe tax on all this?" "Not all," she replied calmly, "but some of it. Referral bonuses? Likely yes, they're payments for a service. If your audience is following your links, it's part of your business. Same with cashback used on items you're also claiming as full deductions." Kofi leaned back, frustration growing. "I thought I was just being smart, using my tools wisely." "You are," Amma said gently, "but now it's time to be just as smart about how you report it." Kofi leaned in as Amma pulled up her calculator. On the screen were neatly color-coded columns: income, deductions, rewards, and notes. "I'm going to walk you through this slowly," she said. He nodded, still frowning, but curious now. "Let's start with cashback. You earned about 800 total from various cards." "Right," Kofi said. "That's on things like Canva Pro, Facebook ads, and cloud hosting. all for client work. Okay, so here's the thing, she explained. If the cashback comes directly from your spending, like 2% back when you pay your ad bill, that's considered a rebate. Tax offices in most countries don't treat that as income. They see it as a discount. Kofi looked relieved. So that's fine. Mostly, she said, but not if you also claim the full amount of the purchase as a business expense. He paused. Wait, what do you mean? If you pay 10 for ads and get 2% cashback, you're effectively only spending $980. But if you claim 10 as a deduction, that's called a double benefit. You reduce your taxes twice, once by getting money back, and again by deducting the full cost. Kofi stared at the screen. That sounds not great. It's something most people miss, Amma said, but technically it's incorrect. If you get cash or statement credits, the deductible amount should reflect what you actually spent after rewards. She clicked to the next tab. Now let's talk about referral bonuses. On the screen, 700. That's what you earned from digital bank sign-ups, app referrals, and promo codes. Right, Kofi said. It felt like free money. I didn't think it counted. Amma raised an eyebrow. You promoted them on your business page. They paid you because of your audience. That's business income. It's no different than affiliate sales or YouTube ad revenue. He sighed. So, I should have declared this? Yes, and it's not just here. In the US, UK, Canada, Nigeria, almost any place with a tax system, if you receive cash or credits for promoting a product or referring others, it's taxable. Kofi rubbed his forehead. And the travel rewards? He asked. You used 200 worth of travel points for a flight upgrade on a trip you wrote off as a business expense. He nodded. To Dubai, for a client shoot. You can't claim the full price and also use rewards to cover part of it. Same issue, double benefit. We need to reduce that deduction to reflect what you actually paid. Amma sat back and gave him a moment. Altogether, she said, we've found nearly 20 in bonuses and overstatements that should have been declared or adjusted. Kofi exhaled. He wasn't in trouble yet, but this was a wake-up call. He looked at the spreadsheet and finally said, okay, let's fix it. Kofi sat quietly for a moment, staring at the spreadsheet. It wasn't just about taxes anymore. It was about how easy it had been to miss. He had been so focused on growing his business, making smart moves, and sharing helpful content that he hadn't once thought about how those hacks might be viewed legally. All right, he said finally. Let's sort this out. Amma gave him a reassuring nod and opened a clean tab. First, let's break out the referral income. We'll include it under business income, clearly marked. They went line by line, pulling figures from PayPal, Flutterwave, and direct bank deposits. Some were paid in cash, others as digital credits or bonus airtime. Regardless of the format, they now all had one thing in common. They were going on his return. That covers 700 in income, Amma said. Now let's fix the expenses. They reviewed the cashback totals next. For every large business expense that had earned cashback, they calculated the true net amount. Your Canva subscription was 200, she said. You got 24 back. So the real expense is 176. Kofi nodded and updated his deductions. It was slow, detailed work, but not impossible. The flight to Dubai was next. Your fare was 500, Amma said. You used 200 in points and paid 300 in cash. So we can only deduct 300. Kofi hesitated, then nodded again. It stung a little, seeing his deductions shrink. But it also felt right. By the end of the afternoon, the revised return was cleaner, clearer, and completely accurate. Amma saved the document and leaned back in her chair. Done, she said. And now, you're reporting your income the way tax authorities expect, no surprises down the road. Kofi exhaled and smiled. Thank you, he said. Honestly, I had no clue. That's normal, Amma replied. Most freelancers don't get taught this, but once you know, it's easy to stay ahead. As they packed up, Kofi pulled out his phone. I'm going to do a post, he said. People need to hear this. That night, he posted on Twitter, freelancers, if you're earning money through referral bonuses or cashback and using it for business, don't assume it's tax-free. Some of it counts as income. Clean up your records now. Thank me later. The replies rolled in. Wait, what? I didn't declare any of that. This explains why my return got flagged last year. Kofi smiled. He had made a mistake, but fixing it meant someone else might not. Kofi sat on his balcony later that night, phone in hand, reading through the comments on his post. People were shocked. I thought cashback was always non-taxable. I've been doing the same thing with my referral links. Is there a guide on how to fix this? He realized quickly that most people weren't trying to cheat the system. They just didn't know the rules. No one had explained that certain kinds of free money had tax strings attached. So Kofi did what he did, based the created content. He recorded a short video titled, "What I Wish I Knew About Taxing Cashback and Bonuses." In it, he broke down 3 key points. Cashback from purchases equals usually tax-free. Referral bonuses equals likely taxable. Using rewards to pay for things you also deduct equals double dip and a red flag. He ended the video with a message: don't wait for a tax letter to realize you got it wrong. Ask questions. Keep receipts. And if you're not sure, get help. He shared the video across his channels Instagram, YouTube, and LinkedIn. Within hours, the comments started coming in again. This time, people thanked him. "I just checked my own records. You saved me a headache." Subscribed, please keep sharing stuff like this. That moment reminded Kofi of something important. Mistakes don't have to be private. When you learn, you can teach. When you fix something, you can help others avoid the same pitfall. He didn't plan to stop using credit card rewards or referral bonuses. But now, he tracked everything clearly, honestly, and with purpose. Because being clever was great, but being compliant? That's what really kept his business growing. Kofi used to think smart spending was enough, but tax taught him a deeper lesson. Not all rewards are just rewards. Some perks look like free money, but if they increase your income, reduce your costs, or come from your business activity, the tax office may see them differently. Moral: if it touches your bank account, it might touch your tax bill. Know the rules before the rules find you. Kofi didn't lose money, he gained clarity. And that gave him confidence not just to grow his business, but to keep it honest. Follow for more real-world tax stories for freelancers, creators, and entrepreneurs. Subscribe for weekly insights that make taxes simpler.